Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today is Tuesday, another day in the market. Definitely a bit of a testy tape as we try and follow this intermediate trend that we closed relatively right on. So with that said, definitely paid to take down a little risk, as we've been talking about. There's been a lot of day trades out there, a lot of individual tactical strategies that you could trade and still benefit from without having to be all in the market in a spot that has a lot of geopolitical risk and just some divergences adding up. So first, before we get into individual stocks, you look here at the chart of the SPX and you will see, this was the last time we kind of rode this 21-day moving average. And at this point, this is when a lot of people came out negative, but then we wound up breaking above it. We didn't fall apart, held in there, triggered. This was your spot to go from neutral to negative to back to looking for good positions before we went. Now here we are following that trend once again, the 8 and the 21-day. So today, you did get a small outside day. You look at it closely, and you will see that you did have, a push through a prior high, which was 198.09, and then we basically closed in the dead lows. So you could either have, sold into some strength when we didn't have the momentum to hold that and fill that gap, and even maybe when we went back below, got short. So at this point, we closed on our lows, and sometimes you get a next day where it just goes the other way and engulfs it and doesn't amount to anything. You had that here, okay? You had that here, and now we'll see what happens tomorrow. And with the look of what's going on after hours, we shall see. We had Twitter earnings. Every now and then, I'll come out and reiterate my stance a few different times. And about 2 weeks ago, I bought the $40 Twitter calls, thinking, you know what? I think that the consensus is really negative. I think this stock has a lot of potential. I think that we could get an option type play like we had with Facebook. And then if you were on the virtual trading floor, you also saw today that I bought more calls. I bought the $38.50 calls. So I was kind of feeling good about it. You go to the chart of Twitter, which we posted on Twitter this morning in all access, and I think I've also posted it on my regular Twitter feed, and said this is what I'm doing. I'm gonna buy the $40 calls, thinking that if it's good, perhaps it can get to 43, and then maybe even higher. And now it seems as if tomorrow it might even want to test this 54 area. We shall see. I'm not sure exactly what it's doing right now. You also, when the number came out, you could have been buying 40s and 41s if you did not take options. You also could have been buying right here. That's why I said if you don't want to take options, here's resistance 1, resistance 2, and then support 1, and then support 2. So you didn't have to just take options. So anyway, with that being said, they beat on a lot of different metrics. Very impressive report. Right around 44, because it went above this resistance, I shorted a third, and then right around this 50 or 49, I shorted another third, which I did tweet, so I'm just giving full disclosure. Now I have a third left that I'm going to let ride. So tomorrow I will manage the position, and it'll be really nice to have Twitter back in the game. Sperling did a really good job with LinkedIn. Stock was telling you, it's still strong. It's been in a corrective phase all the way from 255 all the way down. He listed it as a play of the week last week, and then it held in there. Look what LinkedIn did while the market pulled in today. It's always been weaker. It's been weaker, and finally it actually held up here. So perhaps, tomorrow it gets a gap up, and then its earnings are on Thursday. But it could reclaim the 200-day, and then maybe it'll test this downtrend. But, he's still in options, and he's still in stock. So if you're on the virtual trade floor, you're watching him, and that's good stuff. Facebook probably gets a bump tomorrow, too. It did get into the gap, so I don't have any Facebook. I was hoping that we'd get an 8-day test to potentially buy, and that would also be the prior breakout. So, obviously it's not there. And so tomorrow I'll figure out whether or not there's a trade. I'll figure out if, it breaks a small descending channel. So I would say if it can get above this 75-ish and stay above it, perhaps there's something cooking there tomorrow. We shall see. Apple, I did get out of my Apple stock today. I don't think it's game over. I don't think the move is done. This is not, in my opinion, the high of the year. I just think that it got a little extended from the 8-day, which it does come back and test. Sometimes it also tests a 21-day. I was very excited about it on Friday when it had nice relative strength to the earnings day, and that was your add. And then today, it tried to get above the prior high, which if you use it tactically, 99.24, and couldn't hold. That was a partial sell signal. And then when it goes right, I sometimes sell the rest. and then I try and figure out, if I could buy Verso low, but it closed weaker on the low. So I figured, I could get a cute new buy here, and with maybe Twitter up and high beta up, maybe I won't, but I'll reconfigure it. I still, I approach this tactically, and at times I go with, a swing trade, and this was the last 3-day swing trade, as it proved it could hold the earnings move right in here. Actually, I think I might have been long on this day and then just added on this day, but anyway, and now I figured out. It did a lot of the same back here, into maybe this doji, I don't remember exactly, and then you had this descending little channel, which was another nice trade in Apple before building another flag. So there's been lots of different types of patterns along this trend to go actively, or if you were just in it and say, I'm an Apple investor and I'm just staying the course, I don't care about these little ebbs and flows, that's cool too. That's part of your process. There's this rolling correction around the board, where you've seen, look at the transports starting to break down. Okay, this is now below the 8 and the 21-day moving average. So if you ride a trend like that, this was your breakout failure, a spot to get out of the way. Okay, when it broke the 8-day, you could have got out of there, and now it's coming into the 50-day. So maybe it tries to hold the 50-day the first time, kind of like when the SMHs broke their, 8 and 21-day. Okay, you looked at this little upper support area, you had this wide range bar that amounted to nothing, and then this one got rejected right here, and then, that could have been your short signal. First time it gets to the 50-day, usually it holds, especially if it was a strong group that wound up having a nice breakout and there's some commitment too. And then, you had a little bit of follow through to this reversal, and then it returned back down, and now you got to see what's next here. If it builds a lower level pivot, and that'll give us some clues whether or not the market's a bit more tired. As far as the Qs, what did it do today? Not a heck of a lot. Closing the lows, which is something it hasn't really done that often. It's definitely testy around this 8-day, and here's your 21-day. So it's still, this trend is still intact. But if you want it to lighten up, you lighten up a little bit, especially with the Fed tomorrow. The banks, I'm not in any of them right now. I sold last week when it looked like they ran out of a little momentum. I still think they're okay. JP Morgan, here's the gap. There's a 21-day. Here's the 8-day. It's getting a little faulty there. Morgan, to me, I tried to be long it when it broke above 33, right in here. And then once it broke this, I got out of the way, and now it's heading to the 21-day. Did the same thing for Citigroup. Got involved thinking it could break out above 50, which is what people saw on the virtual trade floor. And then once it couldn't hold 50, I got out of the way, and I'll revisit. This too, could head a little bit lower. And Bank of America, I haven't had on for a few days because it's showing a lot of relative weakness. And, to be honest, this looks a little bit more bearish than bullish as of now. You had this trend that broke right around here after this false breakout. And now some might even say this looks a little bit like a head and shoulders formation, where you have the left shoulder, the head, the right shoulder. And if it were to break this 1520 area, this could see lower prices. So you have to make a decision. Short term or intermediate term, can you, approach these things the right way? Because if you've been, long this thing since I first started talking about it way back when over here, every time it came in and you sold it, you thought you looked good, and then it kept continuing. Does this time look different? Let's see here. Not necessarily, but it could see a move to here, especially if the market wants to correct. And the question is, do you want to, sit through that? Okay, so it's up to you. For me, I don't need to sit through it. I'll wait for a signal to potentially get back in it, maybe when they settle with the DOJ or something. But as of right now, doesn't look great as far as the banks. The banks overall don't look, that great. So why be in one that's showing relative weakness right now? Goldman, looked as if it wanted to try and again today before reversing, giving a little red dog reversal right there. It's still above the 8-day. See how it handles this. This stock's been a leader since earnings. So see if that continues. So far, this is best in breed again, which hasn't happened for a while. What did the XLU do today? Because they were kind of strong yesterday. A lot of people were pointing it out, and PS, it reversed. So this is not easy action. Wide range bar up, tried to get follow through, came back in, negated almost a half. Looks sloppy to me. I'm avoiding that. I don't know that sector very well anyway. The Russell did hold up a little bit better today, but it's still oversold and it's still kind of hanging out down here. So we'll see what happens tomorrow with this. If that continues to go sideways, and perhaps this 1220 is going to be big right there. It did break this accelerated trend line again right here. So right now it's been a little wishy-washy, but at least it's been trading with patterns, right? Patterns here. This was your big head and shoulders pattern that it failed to have a downside follow-through before rallying, came back in, and now it's trying to see what's next here. At this point, I don't really know, but it'll give us some clues whether or not the market hangs in there. We'll also see with social media tomorrow. What did gold do today? Gold didn't have much traction. I guess it's waiting for the Fed. To me, every time this looks good, it would look good to me here maybe. I'm like, okay, gold might be able to go, wide range bar holding in tight, and then that happens. It's just kind of, I'm telling you, day in, day out, it's very tough. This is when it looked good again, and then you had that gap down right there. Then this is when it looked horrible. Then you had a little gap up before going higher. So day to day, this isn't a tradable thing. If you want to be long gold and buy dips and stay with it, thinking you have a gold thesis higher, that's your prerogative. So with all that said, I've taken a few different options into earnings. Usually I risk like a tier 1, and I do premium paid as my risk, and then every now and then, you break even on one or two, you lose half on one or two, and then you get something like this Twitter where, it could be up 700-800%, and it'll pay back your little paper cuts and then some. Again, if you trade the stock after hours with the levels, you could have even done 10 times better than, taking calls into it. If you took a call spread and you're upset because you got copped out, it is what it is. It happens. It happened to me a few times in the past 2 years. So this time I didn't do it. Sometimes I also I've taken the stock and then it's rallied really well where I'm like, wow, that's great. Let me short it here, and then it doubles it the next day. I'm like, wow, I capped myself again. So this time, I did a third, did another third, now I'm gonna let a third ride. So I'm tweaking the process, which is something that everyone has to do in order to make more money and get ahead and stay in this game. So hopefully everyone's enjoying this summer, making some money and not too frustrated. Tomorrow's another day. We'll see what happens with the Fed. Have a great night.